All right, what's going on, my beautiful people? I am excited. We have the first IPO of 2019. That's going to be very, very interesting. And it's because it's LYFT. This is the first unicorn. Now, here's the S1. I was just going to go over all this. There's a lot to do, but I understand you guys are busy. And, this is my job to make it easier for you guys and have the news. So I compiled every single thing you need to know about this IPO, some of the highlights, and then ultimately my verdict on it. So we're going to talk about this. I'm going to try to get through it as quick as possible. Obviously, here's the disclaimer, yada, yada, yada. I don't know anything. Trust the financial advisor. Also, do not forget about the live streaming channel. It's the first link in there. We are trading live every day. So even when this IPO comes out, we are going to trade this live. And if anybody knows me, my history, we've had some nice, I'm not going to flex and say seven-figure type, but I am. But no, IPOs are great, and this is going to be that bellwether. We're going to see how this IPO works out because 2019, the lineup we got coming is going to be crazy, and I put that here. We got Uber, Airbnb, Slack, Pinterest, and Postmates, and LYFT plays a really important role here. So make sure you guys check out the live streaming channel. Make sure you're subscribed. And also the priceless stock trading boot camp. Literally, it was free. We've raised it to $5, but go check that out. The LYFT IPO. So ticker is going to be LYFT. And again, you guys could I will post, this is the direct link to the SEC filing. And one thing to note, they're looking to raise $100 million. However, they have not listed how many shares. And now when it comes to knowing how to trade this, there's going to be a lot, but they go through the highlights. If you guys aren't familiar, I am, subscribed. I'm going to make a follow-up on this to get, explain the intricacies of how to read one of these and how to interpret the balance sheet and all that. But there's just key metrics that we're able to do, so they're looking to raise $100 million, and that can change due to demand. And now, as they go on this roadshow and IPO, and honestly, the more people who watch this, and if you guys are like, oh, I want to play this after, and everyone's putting orders in their shares and everything, it's going to open up really high, or they could raise that price. They could end up getting about $200-300 million. It's all about the shares they want to offer and the price per share. So we talked about those notable IPOs. Like I said, it's important because these guys are going to be the first. So they're going to give us an idea on how IPOs are going to work in 2019. Even more importantly, we're going to get to see how the market reacts to all of it, how the market interprets it, and what they now think of, stuff like Uber, Airbnb, kind of Uber, Airbnb, Postmates. These are all some sort of ride sharing type thing in a degree, or this Airbnb, they use your houses, you use your car, you become a delivery man. But the key now from the financials, they're operating at a net loss. And this is something a lot of people in the headlines I've seen so far say. They're showing a $911 million loss, but I'm going to talk about this because there's something really interesting to note when you look at other metrics where it makes LYFT pretty strong. But they're operating at a net loss and that was in 2018. And what is concerning is that net loss was $688 million the year before. But now compared to Uber lost about double. And now this is the key. This is net loss. So they made $2.2 billion in revenue, and they're increasing the amount of money they're making. However, they're spending money. And if you guys know Uber infamously, the money raised, all that, yada, 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 they've blown through a lot, and they're always going through rounds. But revenue doubled, was $343 million in 2016. So this is the highlight. The revenue growth from 2016, it went from 343 to, half of 2.2, 1.1. So they're growing. The revenue is great. And now this is something interesting, and it leads to the next thing of their market share, but they're different than Uber. They're very similar. It's the ride-sharing app, but their view with how the public views them and their goal, literally Uber's CEO created it. Literally, this is a quote from him because he wanted his buddies to roll around San Francisco like ballers. LYFT is kind of like they've related it to like missionaries and a mission, and they have the fuzzy mustaches. So it's a different company, and why I'm bringing this up, it's related to market share because LYFT has kind of always been the good guy. They've never gotten in any scandals. Uber has not spied on you, or LYFT has not, when Uber has been caught with secret app recordings, their CEO and all this other stuff, where that is a competitive advantage to LYFT and how the market views them. And that's what happened is literally their market share of ride sharing apps, it went from 22% in 2016 to 39% in 2018. So this is both good and bad that they've taken the market share, but they're also at the same risk to losing it, because now if they fall victim to the same thing as Uber, any scandals, if we find out they're spying on us, you see that could really affect your performance and what those headlines and just poor management could do to a company like this. But it seems like they kind of have it solid to a degree. But the next thing is related to, even though they've grown and taken this market share, that's responsible for the revenue growth. So if they don't continue to take market share, the revenue growth could start to decline, or if another competitor starts gaining or losing more shares. But comparing now the revenues to losses, though, they're not growing at the same pace as sales, which is great, because this is the important part, that although the losses are growing in the net revenue, this is what people want for an IPO. This is what makes a good IPO, is that you're buying it. It's not going to give you a dividend or anything. You're paying for growth, but it's investing and waiting for it to become profitable. Right now, it's not profitable. So you have to ask yourself, why are people willing to pay for something not making money with a negative earnings per share? It's because that's a premium. You're willing to pay X amount. If you start paying $20 a share, you're saying, hey, I'm willing to pay way more than there's no such thing as an EPS for a negative earning company, or excuse me, for a PE for a negative earning company, but you could get the idea. That's the premium people are willing to pay. And again, that's why it's going to be important for the type of trend and market it sets for 2019 and IPOs of this nature. But their losses are not growing as fast. So that's a positive sign, because if they keep this up, then eventually they will start to make more than the losses, and that they can make more and more money without losing money. That's what you want to see shift. That's what a good and profitable company is. And also now their margins show the filings show their margins growing. So this is showing they could scale. And this is the whole thing. I put opposite of Tesla. This is the debate people had with Tesla, is that, well, if your margins aren't increasing and they're small to begin with, if you're losing money and your losses aren't growing you're growing faster than your pace of sales, that's not good. This is the reverse, and this is what people are actually liking. And now again, on another point of losses, if you take out the R&D expenses from what they reported, and that's research and development, their loss was essentially flat then. So they took an expanded loss in 2018 by putting in more research and development. So and that's high now, and it makes sense. AI, self-driving, and they are wanting to do this. They literally want to go from investing in self-driving so that they could become this automatic ride-share hailing app, and that could end up saving money in the long-term scale, and if they get that accomplished. So these are really all of the highlights. We are going to get more updates as we see the shares and all that. I am going to make a video, so stay tuned and make sure you subscribe. I will go over, all of this stuff, and I'm really going to pick this apart and even explain what a S1 is, how to go through this, and so you guys can be prepared for the next IPOs and understand what they're highlighting and what they're making important and whatnot. But here are the questions now. What will the business be like with autonomous cars? Is it going to be the same performance? They talk about it a lot in the filing, and they've said this is a risk factor if it doesn't work out, but that's clear. That's been the push that people are going. So how's that going to be? Is it going to be the same company, the same growth, yada, yada? Next, does ride sharing actually reduce urban congestion, and will it continue to trend upward, just ride sharing in general? Is this a fad, or will it start to trend among millennials and youth? Will they keep using this? Will it actually be shown that, oh, wow, it's good for it? Or is it going to piss people off like Airbnb did and upset neighbors and communities and unions? And how are they going to combat and deal with all that? So that's one thing. The next thing, how will competition play against Uber, and will it be a race to the bottom? Meaning you see how they're competing, and it's pretty much who's going to be the cheapest, who's going to get the most drivers and most incentives, and who could, and that's why they're all spending a lot of money. They're taking losses, spending research and development. They're competing. So it's going to be who's going to burn the most money to get the companies until the other guy goes out, or can they both survive and exist peacefully in the same marketplace? One has 36%, one has 40, 15. How are the other guys going to happen? Where are the taxis and other transportation services going to fall in? But what happened to taxis is also another question to try to answer. This is, well, were taxis able to survive, and how did that, what effects did we see there? Well, we see that with competition playing out. And lastly, why do they list Google, Waymo, Apple, and Baidu as competition? So what are their goals? What are their other investments they have? How is this going to affect the company? But this is something they've put as pertinent information and competition, which is pretty interesting for a ride-hailing app. So there's that. My verdict is, you guys, it's a strong IPO. It's a good name on the company. People know about it, and the industry has been waiting, really the public to invest in something like this, especially one of these unicorn type apps. So that's good. It's the first unicorn. It's backed by good names, Chevy and a lot of car companies. There's a lot of people who have money in it. They would love to see this IPO good and successful and even go from there. So there's a lot of people backing it. They're beating Uber to the punch. So it's going to be, this is a strong push. And, Uber, even their competition wants them to do good, because if they don't, then, well, that's not going to be good for them. So there's good enough metrics on this. Like I said, the research development, the losses, the growth, the possibility for good scale in this business model. There's a lot of good things working for it, and it's good enough with that type of name. This is what I'm saying. I don't know if it's going to be a good company, if it's going to last. I do like it more than Uber, in my opinion. And the thing, but how I'm going to trade these IPOs, I'm going to try to get free shares out of this. It's a good, all the numbers, the fundamental story is good enough for me, the backing, the name, everything. It's good enough that I know there's going to be a lot of hype around this. It's going to be good to trade the first day, assuming they don't price it 100% higher, and assuming they don't raise this $100 million through a ridiculous amount of shares. The smaller the float, the better. So there's that. I hope you guys enjoy this. Hopefully this was quick. It did still end up taking me a decent amount of time, but this is it saves, the 30-40 minute hour video going through the S1. So let me know what you guys think. Give me your feedback. Do you guys like Lyft? Are you going to invest in it? Do you think it is better than Uber? So that's the number one question. I love you guys. I will see you this weekend, and I'll see you on stream on Monday. Peace.